Today I'm talking about fintech, obviously more of a view from the fintech ecosystem. And obviously some of you will be studying, financial technology at Birmingham. I've actually got an ex-colleague who's studying the same master's at University of West of England in Bristol. So I'm Bristol based. I currently work at Lenvi. I've been here for about 6 months now, which is a lending technology platform. So it's all kind of, I've been in the B2B side of things. However, for the past 10 years, I've also been on the B2C, so consumer fintech side of things. I also do some work for the Fintech Marketing Hub. So I'll kind of work my way through the fintech ecosystem and a view from the fintech ecosystem, and obviously what I do within marketing and product marketing more specifically. But equally, my kind of dabbling around in the startup ecosystem. So obviously that's tied to fintech and investing in fintech. But I also do a bit of an advisory role for a friend of mine who runs a small consultancy that does kind of, so if you're an entrepreneur or you know any entrepreneurs, obviously you need funding. You can bootstrap your way to a certain point, but you need funding after that point. So either venture capital, and my friend basically helps founders through that kind of journey, funding journey. So I do that for Over Ventures, and we follow kind of the equity crowdfunding space mostly, which is interestingly also a nice segue into my intro. As what do I know about fintech? So Mr. Burger who, essentially, and what do I know? Well, I've been following the ecosystem for about 10 years now. As you can notice from my accent, I'm not British. I am from the Netherlands. So I came here in 2012. As you can see, I've not had a linear line through my studies, but at some point I ended up on the straight pad, and a bit of work, a bit of studying, and then eventually ended up at University of Westminster for an international economics kind of exchange semester. And that's how I ended up in the UK, and I never really left. Even though I finalized my studies in the Netherlands, I kind of stayed here as my wife was here as well. So I then joined Nielsen, then Ipsos, and then eventually at those market research firms, which they are, I worked for financial services clients, and I realized I have an interest in product innovation. And on the left side of the screen, you will see some of the businesses that I've been following for a long time and that I've invested in. Some of them I've invested through equity crowdfunding, as you'll know, potentially. And if not, it is kind of a part of fintech and how the fintech ecosystem came about in the UK. But it's more on the wealth side and investment side. So I've invested in Yonder, Curve, Monzo, Chip, Moneybox, all of those, which is interesting. I've got a bit of a Mentimeter, but given we've got about 7 people here, I probably won't do that later on. It'd be interesting to know, some of you, can drop it in the chat as well as we're here, if you use any of these apps, either here in the UK or anywhere where you're from, and any of the consumer fintech apps that you might be using. So essentially, through the past kind of 10 years, I've been following the fintech ecosystem, but obviously before that, the likes of TransferWise, Revolut, obviously their early beginnings are on the 2010s. So my career trajectory kind of follows that fintech revolution, if you will. Now, I won't bore you with more on myself, but the last kind of bit is that I don't just invest in fintech. Obviously, I've invested in 280 plus companies. Again, 80% of that is below £50 equity crowdfunding. But it does mean that in the past few years, I've been dabbling around a bit more in the startup ecosystem, especially with an eye on tech, but also on consumer kind of products and all of these things. And the investments I've made have kind of hovered towards angel syndicates. Again, it's kind of step on step, it's a stepping stone, and it's kind of a red line through my career. However, I obviously need my day job to pay my bills, so that's where I am. And I think you put the Burger Report, but it's Product Burger series. The Product Burger series essentially analyzes. It's fine. I love the Burger Report. I might actually need to use that name now, because I love that. It's essentially 3-minute analyses of all of the innovative products that I see in the market. Obviously, there's a big focus on fintech. Now, having all that boring intro stuff behind us, obviously we're here to focus on fintech and the wider fintech system, particularly focusing on the UK today. However, obviously I have an eye on Europe and also the global fintech ecosystem. As I started diving into this, I realized how many people I follow, how many people I connect with, how many people I have conversations with about fintech. So that's why, before we get into the kind of nitty gritty of it, there's a bit of a dad joke that Monzo made on LinkedIn a couple of years ago, when they still had about half the followers they have now. So what do you call a financial product with nobody else around it? Alone. And it's kind of a bit of a segue into, obviously I work at Lenvi, and that's a B2B fintech. So this is technology that we provide to lenders so that lenders can streamline services to consumers. And obviously, I'm fully focused on lending because kind of lending and credit provision it takes a red line through that analysis. So obviously you want to build wealth, which is wealth tech. You want to have a better current account, which is just consumer fintech in general. But then and payments technology and all of these things, obviously, that you're learning about. But for me, kind of credit provision, it's played such a huge part to building my life in the UK. Obviously, I've got a 7-year-old, I've got a wife. I need a credit card to be able to make some of the payments, and I needed a mortgage at some point, and all of these things. So that's why I'm currently in Lenvi, and I'm quite passionate about the credit building side of things. However, I won't bore you with more dad jokes today. That was the last one, I promise, and we can kind of dive in to fintech. And some of you might know this. Obviously, I wasn't sure who was going to be in the call and what your experience is, but just a recap of where fintech started. And if you didn't know, so financial technology, and I'll kind of touch on that a bit more as I go through kind of the history of the internet and the history of the computer. Again, all in very, very brief kind of synopsis style. But essentially, the awakening of fintech. Sorry, someone is calling me, and that should be distractions. I should have put that on silent. Fintech awakened kind of with the first iPhone being introduced. Obviously, iPhone 1, I'm not sure of the age of the people in this call, but the first iPhone was introduced in 2007. I vividly recall that, and some others might do too. But that kind of started off the whole, obviously, mobile app and mobile application development. And that kind of, coincided with the global financial crisis of 2008. Now, there's plenty of materials out there that I've got in this deck as well, which I'll share the link with you. There's various things that you can click on it. It's an interactive kind of deck that you can use for kind of follow-up. But because everything I say today, it's highly likely that you only retain about 10% of it, and which is the same for lectures, and I can imagine. So it's always important to kind of follow up. And I've got plenty of brief kind of links that you can follow on to kind of really dive into the detail of the UK fintech ecosystem. The interesting thing is that you're kind of at the heart of the fintech ecosystem because the regulator in the UK was very open with sandboxes and all kinds of things. Lithuania's central bank did something similar in the regulator, but the UK is really the heart of that. Obviously, London is the heart of a lot of capital and investment, so that helped. You've got a level 39, and kind of so in the heart of the financial kind of world in London, you've got level 39, and a lot of the Revoluts of the world have all kind of started there as small startups in the early 2010s. Again, in the kind of the awakening of fintech in its current wave. Now, what do I mean by kind of current wave? Let's move on to the so normally I don't know, maybe we had more people, but I don't think, let's not do the Mentimeter. I think it's fine. It's for a larger call, and if I ever do join in person, Ian, we can do a little Mentimeter in person. Essentially, what do I mean by the current awakening? So obviously you've got legacy financial technology. So sometimes you might someone might refer to actually, well, financial technology that's been around for ages, right? Because we're talking about, going as far back as the Second World War, where the computer was kind of, started evolving a lot more, and knowledge transfer. All fast forward to 1989. The internet and I actually share a birth year, which is interesting. So I've always kind of felt very closely aligned with the internet, but it's essentially knowledge sharing, but and connectivity and all of that stuff. But it's the legacy that you have with International Business Machines or IBM. They've built those initial banking systems, the ledgers that are needed to run banks, and that's kind of the legacy that I'm talking about. And technically, that's also financial technology. We are now talking about the fintech wave, again, that awakened around 2008 and obviously slowly started. And same goes for Bitcoin. So if you're obviously crypto and stable coins and all of those, that's part of the fintech kind of discussion. However, my core focus today will be much more the consumer fintech and the kind of the real products that are sitting out there that consumers and kind of the mass market uses. But a lot of that is tied into it because blockchain technology will play a role. Stable coins will play a role. You can see the Bank of America, their CEO kind of saying that as long as regulatory approval comes, will start going into that space. And this discussion has been ongoing for over a decade in that same kind of world. And so one of the tips that I have at the end is actually by Simon Taylor. He was very well connected with the head of innovation at FCA, so he kind of saw that rise of fintech in the UK as well. And there's various other ones from the ecosystem to which I will provide links. What I mean by open is essentially you've got the legacy, and there's a longer video about 10 minutes, decoding banks. It's a series I've plugged in here as well, where they explain that the legacy IBM systems, the COBOL based, the core banking ledgers, all of that stuff. Essentially, the fintech wave that we see, so the Monzos of the world, the Revoluts of the world, they've taken a lot of the newly available technology. They've looked at it, and they're building on kind of the shoulders of the Googles of the world, rather than the old legacy systems that build on the shoulders of IBM. So there's a lot of open source tools available, and now obviously we've got that new wave of AI and agentic kind of AI and all of that stuff that is kind of filtering into what I've even heard someone refer to Monzo as a legacy neobank now. So we'll see that with AI, we'll see that new wave coming in. That's probably the second or the third wave that we'll see. But again, it's all kind of dependent on that open ecosystem, open APIs. All of these things have come into kind of play during the last 10, 15 years, let's say, after the global economic crisis. Again, preceding the 2008 global crisis, you had a 2001 crisis, which was kind of fueled by the dot-com bubble. When we see that pioneers entering into this innovation cycle, you've got pioneers that started, but obviously mass adoption is what we're looking for. And mass adoption with fintech obviously comes from once consumer expectations are met. So if you look at and I've seen it, the early Revolut app, it was something that not many people would have the patience for nowadays. And that's one of those things, now we are expecting, fintech has essentially reshaped the consumer expectations. It has essentially forced some of the more brownfield kind of providers, again, not to their fault, because you're working with complex systems that are built on legacy kind of coding stacks, tech stacks, and it's harder if you have a brownfield, to grow new things. But obviously the consumer expectations went fairly quickly, and so that reshaping has gone a lot faster than some of the slightly larger banks have been able to keep up with. Now there have been various strategies throughout in the ecosystem. If you follow that whole the rise of Monzo being founded in February 2015, Starlink slightly early in 2014. I'm not sure how familiar you are with the ecosystem, but it's the co-founders of Starlink and Monzo. Actually, they worked together at first. Then they disagreed on something, and this was obviously early stages of Starlink Bank. And one of the co-founders kind of left Starlink Bank with some of his, developers, and then eventually founded Monzo. And this was about 10 years ago now. So as Monzo has turned 10 and now has about 11 million customers in the UK, you can see that that past 10 years is kind of crucial from that point. So I kind of use that as a reference point, not least because that's also my experience in the field. Now, I do want to stop there for a minute, because I think, when we talk about technology in general, so financial technology is a big part of it, because money is important and how money flows is important. Equally so, health, health tech is a very interesting area. Equally so, educational technology, right? And again, technology is kind of already surpassed that loop of where our brains are capable of doing certain things. That will never, it's fairly static. Again, given the tools we're given to kind of, we've now got a dishwasher. 100 years ago, people didn't have that. You have extra time to do more things with your brain. But our brain is never going to go 10x or 100x, unless we believe things that we hear in the butterfly effect. But technology will. And so using that technology within the building of the apps and all these things, that's super important. And that's something that's being discussed on a daily basis. Like anyone you talk to within the ecosystem, some people might be stablecoin fans and they might focus on that, but it all comes back to, what do we need to get done? So the jobs to be done methodology, for example, for me is super important. It takes a red line through everything that I analyze, all of the innovation that I see. And I always come back to this visual. Our human abilities, our brain, sure, there might be slightly incremental kind of improvements because we have more time to ideate, to innovate. but technology will always overtake us in that sense. So coming back and tying that to consumer fintech, essentially all of the products that I've seen, again, having invested in over 280 products, having seen a lot of pitches, a lot of those were fintechs, are fintechs. Are, I say, because some of them have gone bankrupt, but a lot of them are still kind of in the ecosystem. What I've seen is there is obviously, when you ask an investor, they would do some quantitative analysis. Now, obviously, quantitative analysis is super important, but there are all kinds of books. One of them, the London Business School, for example, there's a finance professor, Alex Edmonds. He's got a book on Grow the Pie and essentially talking about purpose. So I think, the title I gave to this presentation is Making Money Work for Everyone. Now, that's essentially the same as the mission of Monzo. But if you tie that back to some of the early mission statements that Google has, or, the tech world had, it's essentially the same. It starts off with a purpose, and obviously that dilutes over time. But if you put that against a qualitative framework, again, by no means am I saying this is the best framework. This is literally just based on my experience over the past decade and more of working in market research. And I've kind of developed my own methodology to assess some of the products that I might invest in or might not invest in. Again, I don't believe in projecting. Forecasting is very hard. You never know what happens. There's all kinds of black swans that might happen. And our brains are often fooled by randomness. Random patterns that we think are true. But I do think if you combine the quantitative with the qualitative analysis and the framework that I've kind of put together of, you've got a product at the heart. This is true for tech, but especially for fintech as well. You've got a product at the heart that needs to be a good product, a solid product. It doesn't have to be very, very complex. It can be as simple as Monzo starting with a current account. So you've got that at the heart, but then you need to consistently focus on improving your user experience. And that's kind of a field of its own, because we want, technology will see that kind of loop. It will always overtake us. There will be AI, there will be all the other kinds of things. But essentially all of the things that we create, be it something for a business user to use, be it something for a consumer to use, we all need a kind of human-centric design, something that's easy to use. And we need to, if you're in the industry, you kind of need to understand that layer. So that's why I like product management and product marketing management, which is something I'll touch on a bit later. But essentially, that's not all. And we often treat these as silos. We've got UX designers, UI designers, but they need to work with product, they need to work with other people, but they overlap with the brand experience, right? So Monzo is a well-referenced example in the world of marketing, in the world of kind of product. They've gone on a slightly different path as to building some of their systems in-house, again, based on open kind of APIs and all of that stuff. But a lot of the fintechs you see, they will be built on layers of legacy as well, because they might choose to use a third party. And if you recall, it might have been a year ago now, CrowdStrike, I think it was, or something else, it was a tiny legacy pillar that underpinned a lot of different kind of systems, and something went wrong, and then eventually everything else went wrong. So Monzo early on, for example, Revolut similarly, they've kind of in-housed it later on, have built some of these systems from scratch in-house, which is very, very cost intensive, but it depends. You kind of have to pick and choose what to do. And that's something that all kind of layers on top of that for the UX point of view, but equally so the brand experience. And again, Monzo, being a perfect example, a bit quirky, still retaining trust because you're still a bank. You still need to, show people that you can handle their money, be it a bank or another financial kind of technology provider. And then customer experience, and then this could be, again, B2B or B2C. So there's a 5-minute read. Again, there's a link here. You can click on it, and I'll share the presentation, obviously, so you can kind of go through this at your own leisure. But that kind of is my framework, how I assess everything now. Obviously, this is how I think, looking at some of the things that I've seen in the investment world, but also kind of in the fintech world, it makes sense, especially when we talk about all of those complexities, all of those layers I just touched on. And I wanted to give you this visual because from brownfield to greenfield, from business to consumer fintech, whether we do it through a phone, whether it's device agnostic, whether it's built on desktop, there's all kinds of things that we need to think of which obviously AI to some extent will make easier for developers, because potentially you've seen a developer interact by voice with a system, which essentially kind of codes an app for him. There's various tools out there. Again, that's something Simon Taylor touched on in one of his latest FinTech Brain Food newsletters. But it doesn't really matter how you interact, because there will always be a field, right? And there's always something that's built, and there's layer and layer and layer, which you see on the right side, that you need. You need a core banking system. Now, core banking systems in a lot of the banks that run essentially the financial system all financial systems in the world that make the money flow through the world are based on that kind of COBOL brownfield system. And the interesting thing is that a lot of the people that were able to code in COBOL have since retired or passed away. So there was about 2 or 3 years ago, there was this, I think it's probably still ongoing, there was this trend in the ecosystem whereby younger people were going, hey, okay, we've got all these lovely consumer fintech apps and all of these things, but a lot of the bank systems, like Barclays, for example, and the outage, that's often due. Obviously, they won't give a lot more information nowadays, but back in the day when the fintech apps were still first starting, you could see that some of the outages that happened were based on COBOL. They were based on that ledger being legacy. And the core banking system and even core banking system providers, given that technology trend, are struggling to catch up. So there's always this human element of, okay, our brain and our elements, and we're only as strong as the collective that works on a certain part of the industry or a certain part of the, be it a neobank, be it a payments provider like Stripe or the likes of those. All of that, no matter what, they all depend on these layers that kind of feed into this coding base that you see, that module that then builds something. And then obviously you've got this whole code stack. And if you don't develop this in a kind of sustainable way, so let's say some of that has been based on someone's brain or 2 people or 3 people, and there's no interaction with the rest, then you tie it back to the UX and it might actually not interact correctly. So there's all kinds of complexities that still exist, even if you introduce machine learning into one of those layers, which essentially some of the banks have been doing, obviously in a very, very controlled environment, because essentially they run a lot of the money for the world. So that is another thing that kind of holds back financial technology in kind of incumbents, because they have a lot of pressure on their shoulders to be responsible as well. They want to innovate, but they need to be responsible. And so the hesitancy then creates a certain way of overthinking things and potentially slows down innovation. And that's where disruption comes in. And that's where kind of some of the consumer fintechs over the past 10 years have been able to gain market share. But I want you to kind of implement this visual in your mind. It's always those layers. There's always something to develop. And that's why, sometimes we might feel, especially if you're studying, and I just want to say, there's all kinds of things and AI is going to overtake all of us. I don't think so. There will always be something somewhere that needs to be done, which potentially machine learning could do. But I'm sure you're having conversations with, Gemini or Copilot, and sometimes it just gives you an answer. And it obviously there's a little disclaimer below as well. And it's like, actually, I know that's not right, because it's only as good as the data we feed into it. And all of these systems are essentially data. It all starts with a ledger. Right. So overly simplified, and there's obviously a lot more. There's a little link that you can click on there, which an ex-colleague of mine, I used to work at Software Banking Software, has written together with our marketing kind of market intel team at the time on core banking systems and how that kind of develops. But that underpins all of it, including financial. It doesn't matter if you're a payments provider or everything. And super apps or embedded finance, all of that stuff needs to still be underpinned by a core system that needs to be able to make the calculations, whether it's money in, money out, and all of these things. So that's the ledger we talk about. The layer on top, and this is what we see. And again, you'll see that I use Monzo a lot, not least because I've been a customer there since 2016. So obviously a year after they were founded, they did a crowdfunding round. I invested £100. Again, it's not a lot of money, £100. And obviously then in 2017, when they started allowing credit account switching service, then I started banking with them. So I've got all of their products. I've tested all of them. But beyond them, I've tested about 40 different products as a consumer. So even though I might use this as an example, know that this is based on essentially interacting with so many different systems, including some of the legacy kind of providers, the incumbents that have innovated and started providing loans or the likes of kind of credit cards and whatnot. Now, there's two kind of, and again, I want to focus on the credit provision side of things. There's so many complex, like we can say WellTech, we can say PayTech, but this is kind of LendTech. So the reason I find LendTech interesting is because democratizing access to capital, right? So we can see that if you've gone if you're in the 1% of the world, you don't necessarily have that money. Let's use some of the richest people in the world. They don't necessarily have the money that is accredited to him. Oh, he's that wealthy, and that's a tricky calculation to make. Is even if someone, I don't want to name his name, but if someone buys a certain tech platform, and he has a certain amount of money that he needs for that, again, 44 billion at the time, but similarly as to offering 99 billion or 100 billion for OpenAI. Obviously, everyone knows who I'm talking about. I just don't want to name his name. You never. This is one of those things that capital, he doesn't have that capital, even though he's one of the richest men in the world. The same goes for the likes of the founder of LVMH. He's the Frenchman. I forgot his name now, but again, he doesn't have all that money. It's somewhere stacked. It's because they know, and they've got their advisors that basically day in, day out kind of look at their money, look at how you can do it, how you can optimize it, how you can financially engineer it. And the way I always explain this, if you look at the loan, the flex, but equally equity crowdfunding, it's all about making money work for everyone. It's all about democratizing access to certain tools that actually haven't been made available to the everyday consumer. So one of them is a Monzo loan. So now I've applied for various loans. I've had a student loan that I kind of transferred. I've been with HSBC. I've been with Atmore Finance. I've been with all kinds of different incumbents, Tesco Bank included. And I've always kind of tested in, take it away and financially engineered my way through family life in the UK. But the Monzo loan is kind of so intuitive that at some point, as I was buying my house, I actually I was missing. There was a time frame of a few days whereby I got money coming in that I could pay, but obviously that money needed to be in an account by 12 on a Friday morning. So I was slightly stressed, and I went in and I thought, okay, so should I do this on Monzo? Because I hadn't had a Monzo loan at the time before. This was a couple of years ago when they first launched, actually. So I went in and I literally just applied, and within about 30 seconds, I had the money, which is again, they use all kinds of credit scoring, so it depends on your credit scoring and if you're known in the country. But I got the money, I paid it, and then I paid it back the same afternoon, which is not ideal. I'm not suggesting you should do that, but because obviously it leaves a hard search on your credit account, a credit report, and all of that stuff. But it's so intuitive, and it's also how you manage it. I currently now have a loan. So the other loan I had, I kind of transferred over to Monzo, the longer term one. And the way you can kind of make extra payments, you can kind of see how much you owe, all of this stuff is because they've built those systems in-house, and because they've thought about the UX, they've thought about how people engage with it. And the same goes for the credit card. Again, I'm not advocating that people should take out credit or take out loans or credit cards, but I'm just saying that making it easy to kind of interact with is super important. And this is kind of obviously clearly what Monzo has done, but equally what Revolut has done for all kinds of things, including financial, like if you need to transfer euros or you need to transfer other currencies. Wise is the same thing, which fits into incumbent banks. So there's all kinds of consumer fintechs that might work together with banks to deliver better services as well. And this is kind of every day in, day out, something that still needs to be thought about, because obviously consumer expectations shift. But equally, there's so much more to build. So you'll often see 11FS, which is one of the links I provide, which is a fintech consultancy for incumbents, quote the statistics of like fintech is 1% done. I recently quoted, and I think someone else said it as well, based on hearing someone else say it, but fintech is 3% done. So there's still 97% of things that need to be done, of systems that need to be migrated, of ways of thinking about UI and all of that stuff, and in innovative ways as well. So we still need, and that's why I'm so excited to see that the likes of University of Birmingham, University of West of England, I think University of Bradford. There's a few universities across the UK that obviously heavily, they've created these masters of fintech, and it's so cool because there's a lot of work to be done still in fintech. health tech, ed tech, if you ever do shift to another industry, but we definitely need more people with more knowledge of all of these things. Now, apologies for anyone who might be offended by this image, but this was a screenshot of a recent campaign by Yonder, which is a London-based credit card provider. Again, they're aiming to be, so again, UK fintech, with some of the founders coming from other fintechs, kind of founding other things. That you will see the same with Revolut, Monzo. There's people that were early employees. They've obviously, some of them might have cashed in. They started their own companies, and this was a very interesting campaign. It ties back to lending, but it ties back to everything. There's complex calculations behind systems that need running, be it core banking or be it providing a loan. And there have been instances, this is the end of the consumer understanding of APR, but there have been instances of tech providers getting the interest calculations wrong. In this case, it was in the benefit of the consumer. So there was a lender, I won't name any names, but there was a lender that had this wrong and then basically calculated a lower interest rate and a lower APR, given they put in the wrong. So the system wasn't actually calculating the right APRs. Then consumers were paying back less than they were initially quoted. Obviously, consumers happy, lender not so happy. I'm always on the side of the consumer, so I was happy that this happened. But there's complex systems and there's complex calculations that go into this when you look at it from a credit provision point of view. The same goes for ledgers. If something goes wrong in that system, if you calculate the wrong amount, the most recent example is Citibank crediting someone's account with $81 trillion. I'm not sure if you've seen this in the news, but I think it was yesterday or the day before. Citibank essentially made a mistake. Someone made an error somewhere manually, but the system obviously allowed them to do it, and it was quickly kind of taken back in the amount. But 81 trillion, I think the total outstanding kind of number of shares in the public market is about 90 trillion. So imagine getting 81 trillion in your account. I mean, I know what I would do with it, but obviously 81 trillion might be a bit much to take. So that's a long-winded way of saying, before I move on to kind of the marketing side and why I chose product marketing, it's a long-winded way of saying, if you look at it, it's simple. You need money to flow and you need financial technology to make that money flow. And there's all kinds of layers and complexities that still need to be improved. There are all kinds of ideation that still needs to occur, all kinds of innovation that still needs to be executed. So it's an exciting time. And I think from the ecosystem, you can see that everyone's kind of passionate. Everyone's still kind of going. Everyone's discussing things. And there's all kinds of things that you will see. Sorry, there's a lady sometimes popping up. That's some street art. So you might see her face pop up here. Ian, you were noting something like that. So no, don't be afraid. There's no one looking over my shoulder. But essentially, that's kind of it. We need money to flow in better ways, and be that liquidity for private shares of companies, be that how you make a payment in your local corner shop, or something complex like a wholesale financing of a number of cars, 100 million moving from a bank to a dealership group that buys 100 Ferraris. There's all kinds of complexities, that things that we don't see that are being touched by financial technology in the current ecosystem, and plenty of more needs doing. So I'm very excited to see that people are studying these masters, including my ex-colleague as well. Talking about my ex-colleague, so he comes from a digital marketing background. He used to work with me at Sopra Banking, and I'll take about 5 minutes. No, actually less. I'll take about 3 minutes to talk through the last bit, which is what I actually do. So you've got general marketing, you've got digital marketing, content marketing. Again, every kind of discipline is layered, just as complex systems are layered. The reason I chose product marketing is because I was at a crossroads about 4 years ago, working in market research at Ipsos, with financial services brands, including kind of pension providers, big banks. And I really realized, that investing in products and innovative products was something I was passionate about, seeing that innovation, something I'm passionate about. I looked into product management, which is obviously more on the technical side of things, which I'm also interested in. I tried to teach myself Python, R, I'm into data analytics, all of that stuff. But I realized I'm also very social, and I like interacting with people. I like kind of doing a bit of that technical stuff and diving into it and the nitty-gritty of it. But I also like to talk about it and simplifying it so that it grows, so that mass market adoption occurs. So that was the reason I kind of chose product marketing and joined Sopra Banking as a product marketer in a slightly larger team. essentially we sit at the heart of marketing, customer success, product, and sales. But obviously, this, you might be reporting into marketing and other things. One of the links I provide is basically a 19-minute video of me talking about product marketing. So I won't bore you with the rest of those details. But there's all kinds of things that I talked about today that kind of apply to marketing as well, because marketing in financial technology is slightly harder because it doesn't matter if you're on B2C or B2B side, you need to take into account that obviously you're dealing with something that's highly precious to everyday consumers, money, and it needs to flow. And there's all kinds of things that, as you heard, that larger incumbents might screw up. But equally, from a marketing point of view, you need to make sure that you don't overstep. But equally, you can be quirky, as Monzo has proven with their sausage roll ATM in Newcastle, which Yonder kind of with their more educational marketing. But then it quickly moves to B2B and how you interact and how you market and build relationships there, because it's all essentially, so it all revolves around trust and people trusting your brand, especially in financial technology. That's super important. So there's all kinds of complexities to the marketing that we do within financial technology. But I think I'll leave it at that. As I said, there's a 19-minute video just on the right here that you can watch. I do recommend, especially if you're doing the financial, and if you haven't seen these yet, there's two, essentially one that was produced in 2019, the other was produced in 2022. Again, both are by 11FS. And there's a wealth more of things, but given you're in the UK, given you're doing your masters, the 11 years, the rise of UK fintech, that's about a 59-minute documentary. So it's just an hour of your time. It's massively interesting. And it's nice and engaging as well. It's fast moving, it's like a movie. So grab some popcorn. So, Friday night movie night. I'm a fintech geek enough to do that, but obviously equally, I'm happy for whenever you want to do it. The other one is they produce is Decoding Banks, and there's one of the videos that I referred to earlier as well, is what are fintechs essentially. It explains it, it kind of breaks it down, simplifies it within 10-minute kind of videos. There's about 11 of them, so you're talking about 2 hours of content. But again, it's very engaging. The way they're one of the most kind of forward-looking fintech consultancies, but they have that big media arm, which is one of the ones to follow as well, which is Fintech Insiders, which I'm sure some of you already do. But these are kind of the three core things, especially if you're based in the UK, is sign up for Sifted's Fintech newsletter. Sifted is kind of the startup media brand by Financial Times. Again, they have a newsletter that you can kind of read. They touch on it. You need to kind of, I think you can read some articles for free, but there's a paid premium as well. But their newsletter contains all of the kind of the bits that you kind of need, I find. Equally so for Fintech Insiders. And then finally, Fintech Brain Food, which is the gentleman I mentioned, Simon Taylor, who's been writing his newsletter for a long time. There's various, kind of super connectors and ecosystem insiders out there, but his is a great starting point. And then finally, kind of wrapping up, and like I said, I don't expect you to retain everything I've said, but these are really some good follow-ups, kind of follow-on reads. And equally, if you have a little look at what I do when I talk to our Minta from the Fintech Marketing Hub, I'm in studios, feel free to kind of reach out to me.